Shares of data analytics stock BigBear.ai, which some investors see as potentially being the next Palantir Technologies, nosedived on Tuesday after the company released its latest earnings numbers. What has gotten investors so bearish on the stock? Here are the 5 most important numbers from Big Bear's earnings report. The first one, 32.5 million in sales. Sales declined by 18% year over year. The company says this is due to lower volume related to Army programs. A big drop in sales is never a good sign for a company that investors expect to see a ton of growth from. Analysts were expecting revenue of 40.6 million, making this a big miss for Big Bear on the top line. Number 2, 90.3 million in operating losses. The company posted a big net loss of nearly 230 million, but there's a lot of noise on Big Bear's financials, and you can stop at the operating income level to see that it's already in the red there. The company did have a goodwill impairment charge again of over 70 million. But even if you take that out, the operating loss would still have been around 20 million, which is deeper than the nearly $16.7 million loss it posted a year ago. The third number, 8.1 million in gross profit. The company's gross margin was just 25% of revenue this past quarter, which means cost of sales are eating up a big chunk of its top line, leaving little to cover operating expenses. A year ago, its gross margin percentage was 28%. It's going in the wrong direction, and if Big Bear isn't charging enough for its software, it's going to be doubtful if it's ever going to get out of the red. The fourth figure, 125 to 140 million. That's the company's updated guidance for revenue for the full year versus its previous forecast of 160 million to 180 million. That's a big reduction in this guidance since May. When you factor in an earnings miss and also a sharp reduction in the guidance, that's a surefire way to crush a stock quickly. The fifth number, 380 million in backlog. This is down from 418 million a year ago. But keep in mind the vast majority of this includes unexercised options, and they are at the customer's discretion. This means that all of this backlog, while it may seem impressive, is by no means a guarantee to flow through to revenue. Big Bear's business looks to be highly dependent on government spending, and when there's a pullback, you can see how crippling the effects are for its business. While it still sees opportunities for more growth, investors were clearly taken aback by these dreadful results. Although the stock dropped 16% on Tuesday on the news, on a year-to-date basis, it's still up around 34%. Given the choppiness in its numbers, this is a volatile and highly speculative stock to own. It comes with a lot of risk. This isn't a company I'd invest in given how unpredictable its numbers are proving to be. What do you think about Big Bear stock? Let me know in the comments. Thanks for watching, and be sure to leave a like and subscribe for more videos like this.